We're live. Oh yeah, yes. So good, amazing day, guys. Grand Rising.
Grand
Yeah.
Rising, Grand
I don't know
Rising.
if you saw what happened yesterday. So what happened yesterday is we had CPI, okay, and we was all prepped about it in regards to the CPI stuff. You heard Alan also say, if they put up the CPI, if the rate comes in higher, sorry, yeah, inflation rate comes in higher, we're gonna see US dollar strength. Okay, so let's have a look over here and see US dollar strength. Look, boom, yeah. Let's go look over here in US 30. Boom. Okay, let's go and look over here in EU. Is another one we was looking at yesterday. It's gonna look very similar to GU. Yeah, boom. All right. But just to put that into perspective, let's try and measure some of these out. Oh, loads of pips over here in EU. It's well over this and that 140 pips in EU. In US 30, the equivalent, we're talking about oh, nearly 700 pips. Yeah, loads of pips as this market just dove out the window. Yeah, did a madness. US 30. And obviously, if we go and have a look here at the Dixie dollar index, we'll be able to see, boom, that strength. And this happened quickly as well, okay? It's happened quickly. It's happened, within a minute, this market had done, within 1 minute, this market had done, loads of pips, a big move, all right?
I did see the good spike up first before it made that move as well.
Well, this is what we always speak about. Yeah, we always speak about if we look at these different pairs. Have a look, for example, here. This is US 30. Okay, I'm glad you even said that. Let's move that down a little piece. Let's have a look at US 30. We've spoken about this. Have a look at this. This here came up to the high over here. See this little wick, and the market was trading within this range. All right, that's actually a very good bit that you raised there. Let's get rid of this. All right, even get rid of this. The market was trading within this range. It made a high, it made a low, and it kept doing a little hokey cokey within this range. Yeah, you might have drawn a smaller box in there, but either way, the bigger box would have still existed. And yes, very, very correct. Before that happened, right? Before we saw this Mazzolini happen, have a look at an indication. Look, this is why our strategy always keeps us safe. Yeah, this is why our strategy always. What's happened? What's happened? What's happened? What has happened? There you go. This is why our strategy always keeps us safe. Do you want to see it? Have a look at it. Even on a 1 minute time frame, it kept us safe. Yeah, even on the 1 minute time frame, it kept us safe. So I'm going to do the 5 minute first, but even on the 1 minute time frame, it kept us safe. Why? Why did it keep us safe? Because we were sitting here and we were thinking to ourselves, even though our bias was bearish anyway. Okay, our bias was bearish anyway. The market's been doing some things. Okay, but have a look. We're trading within this range here. The market did what? Indicated. All right. Then what does it do after it indicates? What does it do after it indicates, troops?
Correct.
Corrects. This is the correction. And we're all sitting there. Okay, nice. Corrected to 50% of the range. And then we're waiting
Continuation.
for a closure above the previous wick high. But do we get it? No, we don't. What we get is boom. Yeah, big spike in opposite direction, faking everybody out, grabbing the liquidity, doing anything if somebody's thinking it's going to go down, and then to hell. Yeah, then to hell. And the joke is, even on the 1 minute time frame, if you was done in a 1 minute time frame, which you shouldn't be, but if you was, even a 1 minute time frame kept you safe. Because look, we only got a closure around about here, indication maybe. Then we got this retracement, but actually voids the idea because it broke this previous structure. So to be fair, on the 1 minute, it doesn't even make sense. Yeah. So it voids this previous structure. Remember, when we get our indication, correction, continuation, like for example, if the market's doing this and then it pushes up, makes an indication, then we get a correction. That correction can't break that previous structure for you to be looking at that time frame. If you're looking at a 1 minute time frame for a 1 minute close above here, but this comes down here and breaks this structure, well, then you're not getting a 1 minute close above there. That idea of when it comes back up here and closes up here is not a 1 minute indication, correction, continuation, because it broke this structure. If you zoom out and actually the 5 minute is here, and you've got a big 5 minute indication, and then it comes all the way down here and breaks this minor 1 minute structure, but doesn't break the 5 minute and then goes up there, that's fine. Because that's a 5 minute indication, correction, continuation. But if you're looking on the 1 minute because you're trying to get all right in here and you see this as this 1 minute structure, then you have a 1 minute, look, here's the line for argument's sake, this is what I mean. Here's the structure here. Then you get this 1 minute indication. You're like, okay, I'm waiting for a close on the next 1 minute above here. If that close doesn't happen and the market comes down here and breaks that previous 1 minute structure, well, you're not waiting for a 1 minute close now. If anything, now you've got to, if you really want a 1 minute, you've got to wait for it to break up here again and then do it again and make a 1 minute close without breaking the previous structure. Yeah? Like that is very, very important. So if I was,
say that again, say that again.
Yeah, because that was very important. There was some source. I know some people have missed it. All right. So I want to go again. Let me take a fresh piece. Take a fresh piece. All right. So here, imagine you're waiting. Market's in here doing something. Yeah. The market's in here doing something.
Yeah.
And you're seeing the market doing this, and you're like, okay, you know, Jay said we're going to be waiting for an indication. You think it's going to be bullish anyway, but you're waiting for an indication, correction, continuation. This is 1 minute structure. All right. This is 1 minute structure. Okay. Trying to think how I should do this. All right. This is 1 minute structure. 5 minute structure is like this. I'm going to make it a different color. So don't worry. This is some 5 minute structure. Yeah, this is some 5 minute structure. Like so, 5 minutes green, 1 minute is red. All right. So if now you're saying, okay, boom, and then you see the price do this, have a look at price on the, like this, and you're like, okay, yeah, boom, I'm waiting for a 1 minute. I'm waiting for a 1 minute here. You see the indication here on the 1 minute time frame, it closes above here. And you're like, that's the indication. Then you see it coming back down in this direction. You say, oh, this is a continuation. If this continuation, bearing in mind that red line is 1 minute structure. So if that correction, yeah, breaks this last low, yeah, then therefore, if it does this and closes and then comes up here on a 1 minute time frame and closes, this is not a 1 minute close because that 1 minute idea that you've been waiting for, what you was waiting for, you're waiting for this to happen. It to correct without breaking this structure and then continue and close. If it on a 1 minute time frame does this, that 1 minute idea, throw that out the window. You're not looking at 1 minute structure. Yeah, you're gonna have to be looking at the next structure, which in this instance, or this example, is going to be that 5 minute structure. So therefore, you're saying that you're waiting for a 5 minute close. You're on your time frames over here. You're not on 1 minute. You'll go to 5 minutes. You're waiting for a 5 minute close above here, which you may get. Then you're waiting for a 5 minute correction, which may happen here. And once that correction doesn't violate this low, you're waiting for a 5 minute continuation. Let me make that a different color. Because you thinking about that one minute concept, this retracement violated that 1 minute structure. So you can't trust it 1 minute time frame. It's not trustworthy. It's not making good structure because when it came back down here, bust through that 1 minute structure. But the 5 minute is making structure good structure. It's making higher highs, higher lows, higher highs, indication, higher lows, correction, higher high, continuation. But not the 1 minute. The 1 minute was making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Then it made a lower low. So that 1 minute either. So you was looking at it keenly with your 1 minute time frame, even though you're not supposed to be in 1 minute time frame. I'm just telling you for example purposes. And you're like, yeah, I'm gonna get one. We're just waiting for a 1 minute close here. But then you see this happen, come and violate 1 minute structure over here. Came and it violated this 1 minute structure over here. But at that point in time, you're not just waiting for this closure to come back up and close above. The only thing you could do if you really wanted 1 minute structure is waited after it broke above here for another little 1 minute retracement and a little 1 minute close like that. That wasn't violating the previous 1 minute structure. Then again, you could say, okay, I'm getting in aggressively if you're doing aggressive entry, because there's my entry when it closes above. And there's my aggressive 1 minute stop below here. Alternatively, if you did it on the 5 minute time frame, you're looking for that 5 minute structure because for whatever reason that 1 minute violated, you'd be saying, okay, no problem. That 5 minutes close has happened there. We talk about that green line, that green zigzag. I'm putting it below this 5 minute correction. That's my entry, and I'm going for wherever my targets are. But if just like I said, when this structure here does that and violates that low, violates this low over here, then you no longer 1 minute, you can't trust 1 minute because it's been violated. Yeah? I want you to think of it. Remember, I'm the metaphor guy and the analogy guy. That's what I'm going to be known for, the way I teach, so people can make sure that they can get it and they can understand what I'm saying. It's like, man can't violate you, bro. This is your threshold. Yeah? This is your threshold. If somebody goes past your threshold of taking the piss, you can't trust them again. Do you get what I'm saying? Yeah, maybe this person was, this 1 minute person was somebody, an associate that you met and you thought you were good friends. When they violated you here, they disrespected you. Like, okay, I've just learned something new about you. I can't trust you that when you've had a drink, you're going to be normal. When you've had a drink, you act at arse and you start saying things out of turn and getting a bit carried away. Okay, this violation of breaking this structure, because previously it was all good. This is my homeboy. We didn't gym together. Yeah, we're working together. Oh, it's cool. Oh, no, we even, went and checked 2 girls together. Everything's going good. We're making higher highs and higher lows. Everything's great. As soon as this guy had a drink, when he had an indication of that we was actually going to go and do something, with our life, we're going to start a business. We was going to go and, go on holiday together. We was going to flip and go to some party on the weekend together. Our first time. This is the indication. It's a new level in your relationship. Yeah, pause. But then man had a drink to celebrate this new level. Man had a drink and then started acting a bit strange and violated structure. The structure was that me and you were cool, bro. We understood each other. We were mates. We were buddies. I thought you knew the rules of the land. But you started acting the arse when there was a couple of gal around and you had some drink. You violated the structure. So as soon as that violation happens, you cannot trust this person. Can't trust them in that setting. Because you're like, right, everything I thought I knew about this person, this violation is just made me have to rethink everything. Who's had to rethink something before with somebody? You thought to yourself that you and somebody were someone, and this one thing happened, something mad. It could be something so small. Maybe you were chatting to some gal and you came in her house and she just had dirty clothes on the floor and you was like, yeah. Do you know what I'm saying? Yeah. Or one of your brothers, you thought, yeah, boom, you and him was sound. And then all of a sudden you get around to, I don't know, you go to a different setting and they start acting a bit strange, like start showing off or something like that. Well, as soon as that happens, that is your signal from the universe that this person can violate structure. So therefore, you know what you're going to do? You're going to say, you know what? Then I'm going to leave all these new friends that I'm making at work. I'm going to go back to my green friends from back in the day that knew me when I was living at, at Mumsy's on my bunk bed, yeah, and have a little bit more time under their belts, i.e. their 5 minute structure. And when I see this, my 5 minute friend make an indication here, even when he's had enough to drink, and he starts making a correction down here because he's all over the place. He started acting a bit reckless. He's talking loud. He's barging a couple man at the bar. I know that my 5 minute friend will not violate structure. So therefore, when he turns around and goes, come, let's go. Or he says to you, no, bro, I'm good to drive. Or he says to you something that you can trust him. He doesn't violate this previous structure. He kept with the program making higher highs, higher lows, higher highs, higher lows, higher highs. He wasn't flaky. And after he got a little indication, he got a little taste of the money. He got a little taste of the fame. He had a little taste of the liquor. he didn't start acting the arse and violating structure. So if you see that violation happen on your time frame like that, you're looking at 1 minute close and you see it don't do that, you need to go, okay, 1 minute's out the window, yo. Let's go and have a look at that 5 minute structure and change and have a look at that 5 minute and be like, okay, let me check it. And then when you'll see, okay, it's respecting 5 minute structure. So if it's respecting 5 minute structure, that's your playing field. That's the tone. I've set the pace. Like, it's 5 minute structure here. It's not new friends. Yeah, it's not. It's old friends for this particular occasion. Yeah, it's friends that you've got a bit more solid. Yeah, if this little 1 minute guy here, look, saw his indication, had his drink, even was feeling a little bit tipsy, but didn't violate, you can say, you know what, bro? Yeah, my bro is a real one still, even though I've just met him, even though he's only on a 1 minute time frame. I met him a minute ago. He gets the program. Higher highs, higher lows, higher highs, higher indication, correction, continuation, closure. I'm getting in, I'm placing my stop even aggressively below this low. I'm happy. Kept with the program on that time frame. If on that time frame you start seeing some next things happening, you're like, whoa, I'm going to delete 1 minute. He's a chief. He's an idiot. He's not my people. Acting a bit strange. Yeah. I'm going to go to a different time frame, aka a 5 minute. Oh, yes, I can see structure on the 5 minute. We're respecting that 5 minute structure. And we're correcting. We're closing on a 5 minute time frame, looking at the time, looking at the candles, closing. Yeah, that's good. Placing my stop safely below that 5 minute structure. Everyone's happy. Does that make sense?
100%.
Good.
I don't want to cut you, yeah? If you go look at GU right now, there's a perfect example of what you're talking about. I'm literally looking at it now. I'm in the trade.
All right, no problem. Let's have a look at GU. Okay.
I'm on a 5 minute right now.
Okay, wicked. Let's have a look at GU. I'm going to delete everything off GU. Okay. I'm going to hide my alert lines. I'm going to zoom out real quick. If you are in the trade, good, but I want to break it down. I don't want us to jump in because I said to you, every time we open up the chart, we must do the same thing. Every time you get in the car, you put your seatbelt on first, you sit back, then you start the car engine, and then you start turning the wheel. You don't get in the car, start turning your wheel before you've turned on the car engine. You understand what I'm saying? There's a process to it. And it's the same when it comes to these markets. Every single time. I can never get in my car and get out my parking space before turning on the engine of the car. Don't know about you lot. Don't know what cars you guys are driving. But first thing I got to do is turn the engine on. All right? So it's the same when we come to these markets. Don't think you can just jump in halfway through. It doesn't work like that. All right? So we can see this market making this bearish structure. Lower lows and lower highs and lower lows and lower highs and lower lows. And right now we've come up to this level here. I'm on my daily time frame. We can see the market was pushed up in here like so. Why have I drawn the line like so? I'll tell you why. Because I must touch this highest point, okay, which is this mountain peak right here. Let me show you where this highest point is. I'm going to start drawing using some. There you go. Highest point. Okay, I must touch the low before the highest point. Okay, so if I zoom in on my daily time frame, you'd see that that line is touching this low before this highest point, and you'd see my little arrow here. So therefore, this market from here touched the top of the range. What a coinkydink. What a coinkydink that it touched the top of this range that I drew from way back, touching data points. And then we've seen a reaction. That reaction actually broke structure on a daily time frame. Look, broke below this structure, even broke and closed below this structure, giving us a big indication of maybe what the market wants to do. But the market then turned around and decided it wanted to. The market turned around. Market turned around and retraced all the way back to like 618 kind of area. I can see that in my eye, but here's 50% around here, kind of around the 618 area where the market was doing the hokey cokey. So all this here, I could draw a big box around this, that the market has been going sideways in here. I can get rid of this Fibonacci because it just takes up eye space. The market has been in here going sideways. Can you see that? It's clear when I break it down, but when you was doing your markup, you didn't see it. You didn't take the time. The market's kind of been in here. We had a little push up in here, and the market's been pushing down. Now, of course, I'm on quite a larger time frame, and we have seen some other things happening. Like we can see some ever so slight lower lows within that range happening. Okay, lower highs, sorry, and we can see some lower lows in here happening within that range. Okay, remember the other day we was talking and we were saying it was kind of like in the middle of a zone, because it was kind of in the middle around here doing some little dance. Okay, if I go down to my 1 hour time frame, we can see the ping pong. Yeah, the ping with the pong, with the ping, with the pong. Yeah, we can see a little ping pong in here. Now, realistically, I'm interested when this market breaks outside of this box. Hence the reason, can you see I've already got my alerts in here? Look. So as you can see that even when if I do my markup 10 times over, it's the same. My alerts are still either side of that range that I put in whenever I put that in once upon a time to ring and let me know Guan. So right now, what my concern is there, G-Van, is that we're at the bottom of a range. In the bottom of the range, we understand is discounted. And sometimes at a discount price, or a lot of the time at a discount price, we see people saying, you know what, this is cheap. I need to buy this. Even if they don't need to buy it. They're like, listen, I want to buy this. The market pushed down here extremely aggressively. Boom, made a low, then made a high, and then started to go sideways. Ultimately started to trade within this range. Yeah, ultimately started to trade within this range. All right. Now, that's on the 15-minute time frame. We drop down to where G-Van said he is. He said he's on a 5-minute. On the 5-minute time frame, we can see this market came up here ever so slightly, making some. Here's look at the structure. If I was to draw a line in here like so, if I was to draw a line, just pushing. I'm going to do it like that. Sorry, let's go and do a line like this from up into this, from this push straight down like this. Okay, I'm going to make that yellow so we can see it. We can see how the market has broken above this little structure over here, little indication here. Look, you see it close on the 5-minute time frame. Have a look. Let me show you something. So the strategy is so solid. Here was a break above this little structure here in the 5-minute time frame. Can you see this? Let me mark it. Let me mark it here. Here is some structure, making it white. This was an indication, potentially, even though we started going sideways afterwards. What's going on there? This was an indication, closure about what it wants to do. But since that closure, all of this stuff that's gone on afterwards has been correction because it hasn't closed above this wick. That's what we're waiting for to say is a continuation. Hasn't closed above this wick until just a minute ago. Yeah, over here, just about on the 5-minute time frame. Just a minute ago, closing above here. All right. Now, the only problem I have is obviously all of this stuff happened over Asian session. It's all Asian session of it sleeping. And you know, you want the sessions to sit in. But based upon that, if I was to zoom out of this, if it was to be technical and you was to take that this was the indication, which I probably wouldn't, I'd wait for a new one. Okay. You could say that is your entry. Your correction is wherever the lowest point this went over the time of it was doing stuff here. Okay. And now you're in the trade bullishly. And if you was, you'd be into a little bit of profits, but your stop would have to be below that. This is where the correction point is. So this market has done this. If you want to say that this was the indication just here, then this market did this from here. It indicated up here. I'm going to make it white so you could see it. Yeah, indicated. It went up some more. It came down to this is the lowest point. And then it just closed just now over here and make that white so you can see it. That's what's happened. If you're talking about indication, correction, continuation, it's just a bit ugly. You know what I mean? Like you could say, okay, boom, I'm entering the trade here. I'm placing my stop below that where it corrected and I'm in the trade now. And if he did that, G-Van, if he's in for a buy, that is in some profits. Okay. Personally, after watching the Asian session, I would have waited I would say that maybe this could be the indication. Yep, just here. All right. This is the correction. And right now, just about there, right here, was a continuation. And you could potentially hit that button there for that trade. Now, if you did hit the button there, the only concern I have is what? What am I concerned about? If I hit this button here, put my stop here.
Your stop being above the last
imbalance below.
Imbalance below. That's a great answer. Yeah, a great answer. Oh, guys, you're gonna just love the course, man. It's got so many questions. I've got a questionnaire, got a little quiz, I've got bare things for you to go over, visual stuff. It's gonna be so sick. So sorry it's taking so long, but I really want it to be a real work of art. You get what I'm saying? Yeah. But yes, 100% by brother Alan himself. Is this imbalance below is a little bit of a concern. Yeah. If you don't want to draw them yourself, remember I've shown you the indicator you can use is this fair value gap indicator. Look, it does it very quickly for you. You see all them red blocks that come in? All concerns, all of them. Because let me tell you something, though this is moving up here on the 5-minute time frame, we've got nice structure, higher high, higher low, higher high. For all we know, this doesn't respect. Remember that friend we were just talking about? Oh, Alan, you missed my analogy earlier. We just spoke about the friends. You missed it. It was a very good source. You might have to play that one back on the video recorded. Yeah. But that friend, we might not be respecting this 5-minute friend. We might be respecting his 15-minute friend. And that 15-minute friend is down here maybe. So therefore, don't get it twisted that we can't get a 15-minute close right now. Oh, if we got a little close here, I suppose. But we can don't we could get a little 15-minute close right now here. Look, 9 o'clock. And then this market decide that it wants to make a 15-minute correction into these imbalances, still respecting its 15-minute brethren, its 15-minute structure before doing that. That is definitely possible. Do not think that it's impossible. It is not impossible. It is possible. Yeah. And if that happens, it is what it is. If you try to take this aggressive entry, or better still, like Alan said, you would just say, you know what, instead of making that stop, that zone 13 pips plus my spread times 2, 14 pips, I'm just going to go all the way down there. I'm going to respect that imbalance, and I'm going to give you some source. What you should do is, you see 50% of the consolidation range, this box here, this line here, just put your line there. If you're so close to that little line there where you're concerned about it coming down here, just go to where that 50% is. And even then, sometimes you might see this market take the piss and wick here, not close, and then go to space. But 50% is a real level. If you want to be safe, the safe place you guys already know is below the swing low. That place ticks all the boxes because it's below that 50% level. It's taking into consideration the imbalance, and it's at below an order block or a bullish engulfing candlestick pattern. Yeah. So let me show you some things, guys, how we can blur and understand this knowledge. So even if you're in that trade, hopefully everything's good on the 5-minute time frame. I do understand, and I will definitely sign it off. I understand why you got in the trade. Even if you got in it here,
yeah,
indication, correction, continuation, and you place your stop here, I understand. So I'd say good, no problem. I'll give you a B for that trade. If your stop is here, past that imbalance, I'll give you an A. And if your stop is
below, my stop was below all of that. I was just being safe.
Yeah, if your stop is down here, then I'll give you, an A plus, because you're taking things into consideration. All right. If you like I said, there's not a problem, yeah, with taking an aggressive trade like this. If you are aware of this problem, that just means the market comes and stops you out. You get it, comes down here, you see a breaker structure in here, you get in again. By the time you get back up here, you've made up your loss. The loss didn't even happen. You see, a lot of the times, if you like, let's say for example, you guys will see some of my trades, or I put in the metric, I was only about 50% correct, maybe even slightly less than that. Because there's times when I'm getting in aggressively. This is why I said it was an aggressive thing. I've gotten aggressively, and maybe the market has wicked me out. Especially, remember, I was trading through quite a lot of news. But I know where that market should be kind of going to. So when I see it go to that place and then break structure on a smaller time frame, which I will say sometimes it's on a 1 minute, yeah, because I'm a little bit more comfortable with being down there, yeah. And I can see all the confluence of it going where I want it to go, then breaking structure, then I'll get in again. So my loss that I've just taken here is completely wiped out by me getting in down here and it getting back all the way up here into space. But it's still marked as a loss in my win ratio. Yeah. But for GVAN, I'll say very good. No problem. You're in there. Still, I want you to understand, now you're in the trade. The next thing is about management. How are you managing that trade? Where are you taking that trade to? What are your goals, your hopes, your expectations about the trade? This is another thing that we go over in the course. All right. The plan. What's the plan? Yeah. You'll see in the course, there's a part that says, okay, you're in the trade now. You're in. How do you get out? Yeah. I've got in. Now, how do I get out? You're a burglar. That's what we're doing. We're thieves in the market, taking money. You've got in the market, got in the house, you've broken in. How do you get out? Because if you can't get out, it's a problem. So when I wake up, I'm going to be putting in work. If there's anybody in my house that's not supposed to be there. So you need to know how you're getting out. Yeah. So when you're looking at this trade now, what I would do is this. First and foremost, understanding what this market is doing, we need to understand the higher time frame narrative. Now, the higher time frame narrative for this GVAN, I'm a bit concerned. Now, there is some good points. The good points are what? Can somebody tell me what there are good points if you are in this trade right now for a buy?
The imbalance
The
that was
imbalances
caused by the
above
drop.
are definitely appealing. That this market might get all the way up into these imbalances. Maybe. All right. Maybe. Now, also, I would be turning around and I would be saying, from this impulse from here to here, what would I be marking out?
The 50% range.
Jeez, bro, I'm so proud. You get what I'm saying? Of the soldiers that are coming through, because it's not no ordinary soldiers. We're just cloth and a one helmet and a little with straight universal soldiers with machinery in the arms and one eye that does infrared and that I can see that you lot are learning and you're taking in this information. Because yes, I would mark out this 50% level of this impulse. Where is the, if I drew it properly? Yeah, of this impulse. I will mark out this 50% level around here because it's a concern, this 50% retracement area over here. So don't get it twisted. GVAN's going to be nice if he gets to here. Because from where he entered the trade, I don't know what his lot size is, but either way, from where he entered the trade to up here, is it going to be, it's looking like about 60 pips.
I was on a 4 lot size. Right now, I'm on 1,000 profit on the demo for the FTMO thing.
What size account?
The 50K. You know the free trial.
All right. So if you got, I want to work your thing out backwards, and I can tell you straight away, even from me working out backwards, it sounds like you was in there too big. So I'm going to turn around and say to you, if you're on a 4, you got a 50K. Look, you see, this is how when I'm marking the homework, when man come and turn around and say something to me, I can say, yeah, well done. But however, and this is the whole point about our accountability. Yeah. So Jiva, make sure you get into the Discord for our United in Funded challenge and start putting in if you're taking that trade right now, you just take a screenshot of it and say, guys, I'm in this right now. This is where my stop. Yeah, I will do. This is where I am. This is where my stop loss was, because Jivan's saying that he had a 50K account. Okay. So it's 2 things that you're doing. I can tell you straight away. You're either doing 1% on 50K. Yeah. So use that. What market was that? It was GU. And how big is your stop? Do you know? Because you told me that it was below.
Tell me where exactly to calculate. I look on the actual stop thing. I don't know which number it is.
Okay, good. Well, that's what we need to fix then. So when you use this little tool here on TradingView, okay, which is the long and short tool. See this here? This is the long and short tool. This one is for long and the opposite is for short. Short position, long position. You can see the thing.
Yeah.
When you hit the button, that line is your entry. This here is where you're going to place your stop. So say, for example, I place my stop below this dashed red line. You can see a number here. It says 0.00306. Then in the middle, you can see this number here, say 30.6. That is 30.6 pips.
Okay, I'll tell you right.
Yeah. So depending on where you play, where you got in, so you would move this wherever you got in, depending on what time frame, because you said you was on a 5-minute time frame. So I'm going to try and work it out based upon what you said to me. Okay.
I got a 38 pip loss.
So that's your stop. So the language is you got a 38 pip stop. So let's imagine that
38 pip stop.
Yeah. So let's imagine you was in here, and for argument's sake, you've placed your stop somewhere all the way down here, very safe. Okay, I can see what you've done below this range. All right, 38 pips approximately. All right. So wherever you got in, so I know that you're in too big, because watch, this market hasn't gone anywhere. All right, and you're saying you're already a grand up on a 50K account. So let me put 38 pips up here. So if I put 38 here, which I'm going to round up to 40, because I must include my spread, which is probably about a pip or half a pip times 2. So I'm just going to put 40 as a stop loss. Now in a 50K account on GU, I don't have to do anything else apart from hit calculate. That is me taking into consideration 1% of a whole 50K account, which would have been 500. Now, I believe that's maybe what you've done. Maybe. No, actually, to the light, it's not. You've actually gone even harder than that.
It's not. Right? It's not. I just put 4. You know, on MetaTrader, I just put 4 lot size.
Exactly. You know, but I'm saying to you, which is good, the fact that you've been able to get into the trade. But I'm going to say something to which I've said to you guys many times. getting into the trade with the strategy, especially the way I teach it, and I'm not rubbing my own like lamp. Do you get what I'm saying? Yeah. The way in which I teach this strategy, I'm telling you, somebody who's got the aptitude, as in some basic understanding of like what I'm saying, yeah, and can look at and can do a couple lines on the screen, can get my strategy. Yes, I can keep giving source and start putting in other strategies, talking about Wyckoff, talking about this, talking about that, talking about a little bit of smart money and candlestick zones, and I can incorporate all these up. But the way in which I teach it, this isn't the most difficult bit. You must add all of these strings to the bow, because though you're in profit right now, God forbid. And what I would say to yourself is this, there, bro, is if you're a grand up in your 50K account, what are you aiming for, bro? How much money are you trying to get?
I'm literally watching it now. I'm about to press close.
No, so where are you? How much money are you up?
Literally, it's hovering on 956, 964.
Which is $1,000 quid. So I'm going to say, so I'm going to say to you, your £1,000 if you was doing a prop firm challenge, is 20% of what you're trying to achieve. You've done 20% in one trade in about 3 minutes.
I just closed it.
No, I never said you should close it. This is what I'm saying to you. Like, you made a mistake by getting in, but I never said you should close it, because you, by the Lord himself, has guided your hand and allowed you to get into that trade, and you're in now. You shouldn't be in, but you are in. Yeah, it's like you got into the rave and you're having a good time, but you're underage. It's not point me kicking you out. You're in already. You understand what I'm saying? You're in the rave. You're not supposed to be there, but you're in. What you should have done is you could have managed this trade. You could have said, you know what? First and foremost, I can protect my position, because so that I don't lose this amount of money. Because I'll tell you something for free. If you're in here and you're up a grand and this hasn't gone anywhere, if this comes down here and stops you out, that could be a 7-8 grand loss. Yeah, it's a massive loss. Yeah, so you're way over leveraged. But if you, by coincidence, by accident, you got in this trade and it's going well, I would say to you a few things. I'll say to you, first and foremost, you want to protect that position, because you're up right now. You losing 8 grand is impossible. You cannot do it. Yeah, if that happens to you, it's finito. Yeah. And you could turn around and say 2 scenarios. Yes, you could either be happy with the grand that you've closed out for, which is fine. Yeah, I can't turn around and say to you that's a bad thing to do, to close out. Or you're going to say, you know what? I might have hit the gravy train. And this market, even if it retraces back down here to close some little imbalance I can see, could get up into these levels, which would make that 1 grand trade that you just took massive. Like, now I'm not going to rate that on the basis of, oh, you're such a good trader. I'm going to say that you got in it by accident, which is fine. It happens sometimes. Sometimes you get in early. Sometimes you make mistakes. Your mistake was quite large because you haven't managed your risk properly. But sometimes the sun shines on you, when the sun shines on you, you should just lie down and get that vitamin D. Yeah. And on that basis is how you can manage that trade. So have a look. I'd be looking at it like that within the range. I'd be touching these data points here. Can you see I'm touching this low before this highest point?
Yep.
And I'm looking at it. And now, right now, whilst you're very anxious, see how your anxiety was high and you're like, oh my God, I've got to close it. Jay's telling me off and I just closed it. That's the anxiety that happens in a real life. Even if you didn't over leverage, but it happens more when you've over leveraged. Because now I'll be asking myself, am I going to close above here or are we going to close below here? Because I've just drawn some lines in here. I'd like to see a nice little higher high so that this becomes a significant structure, but I'm on a 1 minute time frame. Now, I could personally go down to a lower in seconds, but I'm not gonna. But right now, I'd be sitting here, if I was you, biting my nails at my £1,000, but if I wanted to stay in there, because I want to manage, I'd be questioning, are we gonna break above these highs, indication, or are we going to start coming back down here to start closing up some stuff, and my £1,000 is going to start quickly going down to 600, 500, 400, whatever it may be. Yeah. Now, your lot size, what your lot size should have been, is it should have been, you've got a $50,000 account. Now, there's 2 ways you do this. And the way in which we are taking our journey is longevity. Because look, you're going to hear another trader that says, listen, I get my prop firm challenge and I've got 10 trades before I blow my account. They're going to say, I've got 10 trades at 1% before I blow this account. Because if you lose 1%, you lose 12, you use 10 of those, that's going to be 10% your account's blown. They're going to say, I've got 5 trades in one day before I've blown my account and 10 trades in total, because they're going to be risking £500 a pop. And 500 times 10 is 5 grand. And if you lose 5 grand, which is 10%, you've lost. But if you succeed in one of those trades, you've won. I don't really like that for beginners, personally, because you could lose 10 trades. Your risk management is not on point. You haven't taken into consideration your spread. You haven't taken into consideration swap. If you hold something overnight, especially on a Wednesday, you have triple swap. And therefore, you might only get 9 trades out of that strategy. And yes, you may pass this challenge because you took one trade and it went for a 1 to 5 or 1 to 10. But what have you learned? So you're either going to do this. You're either going to make the risk 0.1, however you like to see it. However you like to see it with your eye. Yeah. Or you're going to drop this 50K account down to 5,000 and say you're taking 1%, or I think you could potentially take 2% risk of that amount. So that means if you divide, 5,000 by 100, you've got a good few trades that you can take before you've blown this account. Now that seems better in my opinion, because then you're not necessarily passing this challenge in 1 or 2 days. You're going to say, Jay, I passed this challenge in 2-3 weeks. But in those 2-3 weeks, you've learned bare stuff. This is the whole point. It's about the learning. Because passing the challenge, don't get confused. This is where people get quite confused. Passing the challenge doesn't mean jack squat diddly. They'll give you a little certificate. So congratulations. You'll be able to say to your brethren, I passed the challenge. But then you got to do it again for 5%. And then after you get your live account, then you've actually got to do it again before you actually make £1. So therefore, the aim of the game isn't, let me just close my eyes and kick the ball and hope for the best. The aim of the game is, can I get some sort of technique up where I can consistently put the ball top bins? Can I consistently put the ball top bins constantly? If that takes me 4 weeks, it's better that I develop that skill over 4 weeks so that I can actually make some money than I'm just doing national lottery, closing my eyes, clicking my heels, hoping for the best, because I have to do it 3 times. So how likely is it you're going to hit the lottery 3 times? Extremely unlikely. It was unlikely you hit it once. Yeah. But it's extremely likely to impossible you're going to hit it 3 times. So that's why my whole energy is like, let's try and get as many trades as possible and learn how to win, learn how to be profitable. That doesn't mean learn how to have a 90% win ratio. It doesn't, that'd be great if you can have a 90% ratio, but you don't need it. We've watched these interviews over and over and over again. Professional traders turning around and saying that their win ratio is 40%, 30%, 50%. Some of the best traders in the world, they say 60% win ratio. Because it doesn't matter that's not vanity. This isn't like, oh yeah, I'm so vain. Every trade I take wins. But every trade you take wins it's a 1-to-1. Or it's a 1-to-half. Or your risk management's all over the place. Or you don't know how to hold your trades for the real winners. So all you're doing is going backwards and forwards. Yeah. The reality is that you want to be in a position whereby you're like, I am a profitable trader. Whether you lose 8 of them, 80% of your trades you lose. Yeah. And only 20% you win. If you show me your P&L, which is profit and loss statement, for a year, and you got a 20% ratio, but yet you turned 10 grand into 30 grand, I don't give a damn if you lose 8 times in a row. I'm happy. Go for it. Do whatever you've been doing, bro. I don't care. It's only man who's like, oh yeah, man, if you want to learn, I see the advert, the entry. If you want to learn how to take trades and get a 90% win ratio, blah, blah, blah. What are you talking about? What are these guys talking about? But we know the stats. We know that some of the best traders in the world's win ratio is 60%. So what does the win ratio mean? I want to know risk to reward first and foremost. So man turning around and saying, this is another thing that pisses me off, Instagram. See how I made 10,000 pips or on this trade, or 1,000 pips on this trade, or come to my Discord group and we'll show you the last trade. Over the last month, we've done over 4,000 pips. So what? Because let me tell you something right now. I could turn around like this, do the exact same trade that Jivan took, put my stop down here in hell. My stop is 8,000 pips long. And this, my target is 8,000 pips. And when I hit TP, I'm going to say to everybody, today, guys, I did 8,000, or this week or this month, because it's going to take some time to get up there. I did 8,000 pips. I'm like, wow, this trade did 8,000 pips. But it was a 1-to-1. Who gives a damn that I did 8,000 pips? I'm better off doing 8 pips over here with a 1 pip stop or with a 4 pip stop, because that's a 1-to-2. I did better than you did in a 10th or a 20th of the time. So man turn around saying, yeah, I did 100,000 pips. Another thing is you hear people talk money. See how I made £10,000? Yeah, it's clickbait. Fair enough, it's clickbait. But it doesn't matter if you was risking 5,000 on the trade. That's just a 1-to-2. So even though I've only got £100 account, I risked £4 and made £20. I took a 1-to-5, bro. I did a 1-to-5 trade with no drawdown, with no issues. Yes, I didn't have a big enough account to place that as a £5,000 risk. But you didn't do any, there's nothing you can teach me better apart from the fact that you got more money in your account. Like, people need to talk risk to reward. People need to talk about profitability. That's the only thing that counts. All the rest of the stuff don't count. It's just fugazi, as they say. Have a look, Jivan. Management of the trade. Yeah? We've now seen the market come in here. And what did it do? It's trading within this little range here. Now, we've got an indication here on a 1-minute time frame. Jivan accidentally got into this trade when he wasn't supposed to. And then he, out of anxiety, he closed the trade quite quickly before I said anything, which is fine because he was at a good $1,000, which is way over leveraged for what he had. I'm sure, Jivan, as well. Another thing you can do is this. On MT5 on your phone, as well as on, the charts, when you pull out this stop loss, when you do this, when you enter the trade, especially if you've got one-click trading on, I've told you guys about one-click trading. I would advise all of my students have one-click trading. Okay? Especially when you know what you're doing. When Jivan got in this trading, you're pulling out your stop loss, because when you hit a one-click trade, it doesn't put your stop loss in. It does this. And this little line here comes in, which is your entry, that green line. Then you need to go and click on this line on your MT5 on your phone. You need to click on it and drag, and it will not, sorry, it will say SLTP or something like that on your phone, like a little bubble. You will click SL for stop loss. And then when you drag this line here, when you drag your stop loss from here, you will see the numbers running. I think on the MT5, it won't show as a minus. It will just show as the number, I think. I can't remember. It might show as a minus. But you will see that when you let go of your stop, Jivan, over here, that it was minus $6,000.
Yeah.
You would have seen that. So therefore, that stop could have only be, bearing in mind you're only trying to lose $100 at a time, that stop at max could have only been here. Because anywhere past that, you're over leveraging. You're not managing your risk. You're willing to die on this one trade and then have to go back to your prop firm, take out your Visa card and put more money in it. It's the same thing. When you do one-click trade on an MT5, you can pull, you will click it, it will go get you in the trade immediately, but you have no stop loss. You must go and click on your entry and drag down. If you drag down on your MT5, it will be putting in a stop loss. If you drag up from your entry, it will be putting in a take profit. Yeah. So when you're dragging this down, if you had any, confusion, you wasn't too sure about exactly, if you put in the right lot size, when you start to drag this, it will tell you the story. Because if you're looking at losing a maximum of $200, when I'm dragging here, it should be like $30 minus, $40, $60 minus, $80, $100 minus, $120 minus, $100. Okay, here's my $200. This is me. This is me managing my risk, $200. So you will see there is no excuse. If you're able to place this stop, there's no excuse of you knowing how much that loss is supposed to be. Because if you're getting in a trade and you don't know what the loss is going to be, then you are not only a gambler, you're nuts. That's like you're getting into a situation and you don't know that you could actually lose your life. But if you knew, yeah, bro, we're going to go and do X, or We're gonna go and fly in this new plane. It's a prototype. We haven't quite tested the landing gear. Yeah. So the risks are we could die. Yeah. But the benefits are you get to fly the first prototype of this type and it gets to go down in the history books. Well, now you've given me all the information, bro. I don't care about the history books. I got 2 sons at home. I can't afford to die in no experimental plane that you made in your garage. I cannot afford to die. Do you get what I'm saying? You must know what you're willing to lose in any situation. This is not just trading, in life. If you don't know what you're willing to lose, you haven't quantified that, then you're a madman. I need to know what I'm willing to lose. You see my car? My car's outside. Anyone who knows me will know. If you say to me, Jake, can I drive your car? I want to take your car for the weekend, or can I drive it? I say, are you good? Are you good for it? If you're good for it, here's the keys, bro. What do I mean? I mean, if you wrap it around a pole and my insurance company are not paying out, are you good for it, bro? Do you have the dough to put the panels back on my whip and to put it back into good standing? Because if you're not good for it, you're not driving my car because you're not insured on it. It's that simple. Because me, then, I've quantified my risk. I know I've got my brethren and he's tossed me his Range Rover keys, his SVR keys, and I've tossed him my keys. Yeah? It's cack. Because I'm driving his whip. He's driving my whip, and I know he's good for it. I know if he does a madness, he can sort it out. I need to quantify my risk. I cannot be in a situation where I don't know what I'm willing to lose. Yeah? So it's very, very important, all right? So like I said to you, make sure when you're pulling out this that you are always, whatever that number is you decided. If you said it's going to be 1%, but you're like, oh, 1% is a bit too small. I feel like I'm going to drop from having 100 trades, that I can take before blowing my account to 50 trades by 2%. I will allow this. I'll be like, you know what? I get it. Because you don't necessarily want to be doing it forever. Like you've kind of got the strategy. You don't want to be in there just $50 trades, making $200, $300. Like you want to kind of make some headways. Fair enough. At a 1 to 100, guys, you can have a good trading day today and get a 1 to 5. That's $500. That means if you really keep up that pace, you've done your challenge in 10 days. That's enough. That's like you're not speeding and you're not going at 20 miles per hour, because that annoys me as well. Man who's driving in the road at 20 miles, if they don't have to, driving at 20 miles per hour, that annoys me as well. It annoys me man are driving too slow. It annoys me man are driving too fast. Drive at a decent pace. Even if that pace is slightly over the speed limit, like you're on the motorway, you're supposed to be doing 70, but everybody's doing 80, bro, and you're just doing 70. Like if someone's gonna get a ticket, everyone in this motorway is gonna get a ticket. So it's not a ticket situation. It's at least keep up with traffic. That's what they say when you learn your traffic. You're meant to keep up with traffic. That's driving safely. Do you understand what I'm saying? So therefore, in my opinion, if you said this, bearing in mind you've got a 50K account, you're giving yourself 50 trades before you blow your account. If you're doing that 1%, you're giving yourself 100 trades before you blow your account. Yeah? But at 50 trades, you're like, you know what? That's good enough for me to do my work. Because look what Jay just said is true. If I can catch a little 1 to 5 every so often, I'm going to do this challenge in 10 days. I'm going to do the second phase in 5 days. So in under 2 weeks, I could potentially bust this challenge with just 2% risk on the 10%, not even on the whole account. So to me, that's not too bad. To me, anything more than that is you're kind of being a bit greedy. See, when I put it into perspective like that, you think to yourself, I kind of get why Jay breaks this down. Look, if you can get a 1 to 5 trade here today, you're going to make $500. If you do that in 10 more days, of course, you're going to take some losses. I'm not saying you won't. So maybe it doesn't take you 10 days. Maybe it takes you 15 days. Who knows? Maybe you take a 1 to 10 in one of those trades. Who knows? But I'm just saying, best case scenario, you do it in 10 days. That's fantastic. With little to no anxiety whatsoever. Let me show you something that I sent. What I sent you. Let me show you what I sent you guys, because I don't like to just talk for talk's sake, as my mom used to say. Okay. Let me whip something up of what I sent you. Let me get this off here so you don't see my last story. I sent in the group and I showed you guys one of the analytics pages. Does it show anything? Does it show what I wanted to see? It doesn't show what I wanted to see. I can't bother to open it all the way up and the other thing. My drawdown from my $50,000 account, my maximum drawdown was $243. So at one point, I was minus 200. So I was 49,767 pounds. Max drawdown. Don't get it twisted. That metric measures out your losses, because maybe I was at 53,000 and I took a 500 loss, and I was at 52,000 and and it adds them all up. So it would show you something like 4,000 lost. But the maximum drawdown from that high watermark, from that 50K, was $243. Because when I first started, I just start off calm. I want to get my head above the water. What do I mean by that? Have a look here. We have had a little retracement, but I actually still think you might be good. We're just at this 50% level over here. We shall see. And now this is the highest point. This is the low before the highest point over here. The market's still doing the hokey cokey. Maybe now we get a reaction to break above these heights. But remember, this is on the 1 minute time. This is just looking at what G-Van's trade was, which is very aggressive. Remember what I said to you when we was looking at this trade on a bigger picture. I was like, realistically, that's where your stop should be. G-Van's trade, his stop was down here, but he completely over leveraged. But he took his blessings. He did close himself out of the trade and took his £1,000. Amazing. You're 20% of the way there if you was at 50K. Yeah. And sometimes it does happen, guys. Sometimes you might make a mistake. And it actually takes a very strong individual. So I'll rate G-Van as well. It's a little bit of anxiety, to be fair. It's a little bit of fear, but I'm going to give you some ratings as well. It takes a strong individual to close your trade also when you make a mistake. Because sometimes you make a mistake, like, oh my gosh, I'm 10 times bigger than what I'm supposed to be. I'm supposed to be 0.1. And I went in at 1. But then you start going green and you start thinking to yourself, oh, you start thinking to yourself, all the possibilities. I'm concerned about this now. The fact that we've broken past this 50% of this consolidation. I'm concerned about it. All right. So I'm looking at it right now, but it hasn't given me an indication, correction, and continuation saying it wants to go in the opposite direction. For G-Van, cool. He took his money because he was at £1,000 and he was very high risk. But for anybody else, there's giving no indication, not even on a 1 minute time frame. Look, we've got no. Here's the structure. Market has not indicated and closed yet, hasn't corrected, hasn't and continued here to say it wants to start coming in this direction. And even if it does, your stop should be down here, and I'd be looking at this level here as it giving that respect to that structure, and then maybe doing this. Yeah. So either way, like if you got in this trade where your stop is supposed to be, this is all calm now. You're in the green at the moment, but you're still calm. This is a slow moving trade. We know about sessions, London just waking up, blah blah blah, slow moving, we might see this market go all for the whole day, trickle down here until we get New York overlap, and then we start seeing that. Yeah. So that's still calm. I was just really going in and talking about G-Van's situation and how he got into that there and how we would manage that. At the moment, I'd be managing this. If I was G-Van, yes, probably good decision. Took the money here, took his £1,000. After I saw this break, this 50% level, I'd be concerned anyway. So about here, I'd be like, but that would have been G-Van back down to like £500-600. So he took out £1,000. Great. Right now, this market is at the bottom of this yellow range here. Can you see this? This yellow line here is at the bottom of this, which is discounted area. So if there's ever a time that this market wants to do something and turn around, it's now. Yeah, in this discount area and looking left, understanding some structure previously in here. If this market ever wanted to turn around and break this high, it'd be now. Because then it will be still respecting the narrative of higher high, higher low, higher high, higher low, higher high. Do you understand? Yeah? So therefore, we'll see. But at the moment, look, even here, we still haven't quite got a closure that I'd really rate. Now, maybe we have. This is a closure on a 1 minute time frame below this structure. It's a bit tight. And when you get this tight, then I'm relying on Owanda to be delivering these candles to me properly. All right. But this is a kind of closure below this little low over here. Maybe you can't see it, but the wick low is just about here. And the closure on a 1 minute time frame is a little bit lower. So now what we might be getting is a correction and continuation in the wrong direction. Yeah. Or this might be turning around and say, yeah, we just grab some of the liquidity, nam, 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 nam. And now we're going to come and break these highs. So now's the moment of truth of whether or not this market is going to break this structure or break this structure. It's the moment of truth now. If it comes and breaks this structure, you might choose to get out of your trade early because you just don't want to be in the red. Maybe your account's quite low. quite in the red already. Or you might say, no, I don't care. My stop's all the way down here. It's only $100. I'll just ride it out. Yeah, I'll ride it out. Is what it is. But I'm just looking at this on a small time frame, which ultimately, guys, you're not supposed to be down here on a 1 minute time frame. The only reason I'm looking at it is because GVAN got in there early. All right. On a 5 minute time frame, have a look. You're calm. You're just like, yeah, I'm in the blue I'm in the green right now or the blue right now. Once this market doesn't come and start closing below this structure, I'm good. My stop's actually below that. I'm easy. Am I? Yeah. Am I? Or, yeah, I'm all right. Okay. Or maybe you've even put a safer stop below the swing low and below the 50% level, because we already said that there was this imbalance in here that Alan identified. And maybe you're here and you're just like, yeah, I'm cool, man. It's a little 30 pip position. I'm in. My plan is to actually start scaling in if I start seeing this moving in. All right. There's a nice chapter in the syllabus on scaling in, showing you guys how to scale in effectively, the risks of scaling in. Yeah. And how to make sure that you keep your risks the same when you're scaling in, no matter what. Okay. All right, cool. I'm going to leave this. I'm going to place a little alert here. If this rings up in here and it's going to the moon. If it's going to the moon, guys, obviously you're already in the trade, but for those of you that are not in the trade, have a look at this now. Can you see how I was talking about our friends? When we first started, we talked about the 1 minute friends and the 5 minute friends. Have a look now. Now time has passed. Look, we are 15-minute friends. We've got 15 minute closures above these levels. So even if this market came down into this level here, have a look at the imbalance that it might decide to come down into. Not even this one down here, but there are closer, smaller imbalances that for a retracement, it could come down, watch, into here. That's an imbalance. But that would be on a 15-minute time frame. I'd be happy if it just goes in here, makes a retracement and closes in here, or wicks down in here, then comes back up in here. Because now you've got even more stronger brethren, family now, that are coming out and supporting you and showing you, yeah, boom, we want to go up. Because on a fifth, not on 1 minute, which I said was, yeah, that guy you met at work starts acting a bit mad at the party. Then you've gone a bit further than that. Yeah, this is your brethren from school on the 5 minute, so you're in. But now you start getting 15-minute closures. It's your best friend. Your best friends just come and linked up with you now. So I'm saying to you right now, it's not impossible that this market doesn't come down here, tap into this imbalance, or if it wants to be troublesome, as Alan identified, it could come all the way back down in here into this concern that Alan identified, which is the imbalance over here. And if it did that, it would still be respecting 15-minute structure when it turned around and came up here and started closing up here and going to the space, because there's the structure on the 15-minute time frame. Yeah. The market came up here, made this low, higher low. Go on. Someone was going to say something.
No, I was just agreeing with you still.
Yeah, you get it. So this is what I'm saying to you when the market moves in waves and we talk about this Russian dollar and stuff. On a 5-minute time frame, GVM was able to get in that trade and catch a quick grand, even though he over leveraged. That's cool. That was one of the small. Let's go to our Russian dolls real quick. That was one of the small Russian dolls. Yeah, that was one of the small Russian dolls. Is that it? That was one of the small Russian dolls. GVM jumped in here, look, and was able to benefit possibly from getting up into maybe even this level or this level. Cool. But when he got to this one here, the top of this level, this is 15-minute, bro. We must put some respect on my name, because this 15 minutes is going to slap GVAN back down over here, past his stop. And then when it gets to that, when that gets to the 15-minute equivalent, then it comes back up here. Boom. Now it's playing within 15 minutes. But when that 15 minute gets up into maybe an hour structure, boom, it might get a slap again. And if your stop's not in the right place, you could just get stopped out. Then when it comes back up here, because it wants to go up, even though this is like the wrong way, I should kind of invert it, wants to go up. But if it doesn't, if you haven't placed your stop in the right place, when it comes up to this 4-hour structure, boom, it's going to give you a slap. And if your stop's not in the right place, it's going to be going back, trading within 4-hour structure, which might be a retracement below your entry, below your stop, sorry. Even though it still wants to go up, and then it comes over against the daily structure, and then the daily structure is actually bearish. The daily structure is actually not bullish. You've been trading a retracement. All of this trading that you've been doing here is a retracement, because on the daily structure, it's actually bearish. So when it gets up to this thing here, it's not busting past this level. It's going to consolidate for a little while. Whilst things about it, it's going to start going in the opposite direction. This is about understanding the narrative, understanding these Russian dots. That's why when you open up any trade, you must do this. Boom. What is happening on this bigger Russian dot? Oh, this is a bearish market. Oh, I see. So even though GVAN's buying the market over here, the bigger Russian dot, the bigger ceiling, the real rules of the game is that we're going down. So yeah, you might catch a little pips here on your 1 minute. You might even catch a little pips here with 5 minute structure. It's unlikely you're going to catch some pips here on monthly structure because it looks like we're ready to go in this direction. It's unlikely you might catch energy on a 4-hour structure because from a 4-hour perspective, we are making lower lows and lower highs and lower lows, and I'm expecting a lower high. I'm not expecting you to start saying, yeah, I'm targeting, well, it's a bit different on the 4-hour. Let me see the 4-hour. Possibly. But I'm saying to you, it's, if the market, if it breaks out of this yellow box, it's still in this yellow box. So I don't know, because it's still in this yellow box, it could be deciding it wants to come back up here in the 4-hour range. It could just be still in that box. Yeah, so that's that 4-hour, what I was just about to say is incorrect. But if it does this, breaks outside this 4-hour box, starts breaking 4-hour structure somewhere back here, all right, does this and does this, we're expecting this market to keep going in this direction. Unless on a daily time frame, it's just made an indication below some structure. All right, this is the structure. Trying to draw it properly. Unless it's made this indication on some daily structure, which is a bigger Russian doll. And after an indication, what are we expecting? Somebody tell me.
A correction.
That's right. So even if this is the case that you were like, yeah, man, this is touched the top Russian doll here and it's coming down and it's just broken its daily structure. Okay. Now, unless you're taking daily trades and your stop is up here, then we understand that by it breaking this daily structure, even though we want to be in it for the sell, the smaller structure is that we're expecting to see a correction. And this correction, because it's a daily correction, could be huge. Could do it for another week. Could be 2,000 pips coming up here. Even though the bigger Russian doll is that it might get up here, maybe, not saying for certain, to a 50% range in here, start breaking down structure again. Yeah. And if we're wicked and bad, we get an entry here. Because the overall narrative is bearish. We want to be in for the sell. It started to break structure at 50% level, giving us confluence. And if we're lucky, by the time we get to the equal lows, we'll be killing it. But the reality is it's supposed to be making lower lows, lower highs, and lower lows. So really, this is supposed to go to hell. And you are laughing your head off, turning around and saying, Jay, I passed my challenge in one trade. Or this trade was a $2,000 trade or $10,000 trade or $20,000 trade. Because this bigger picture, that's what's going on. But when I zoom in, even though we want to sell and we're at the top of this big range, when I zoom in, we're looking at it saying there's a potential quick little buy opportunity. That buy opportunity might be for 200 pips, might be for 300 pips. But it's understanding this Russian doll, understanding what the bigger picture is. Yeah. So like I said to you right here, my concern is that we are trading within this yellow box still. We haven't broken outside this yellow box. Yeah. And this here, we're in an area of, we might be in an area of discount. Don't get twisted. Don't think this market couldn't take the piss and just do this. I'm not quite there and push down again here. It could do that. It could say, I'm not quite there, Jay. Let me push down here again. And then I'm going to go. Because it's not quite on this at the edge of this yellow line. And that might be the way I've drawn it. Let me check. No, I've drawn it okay. Yeah. In regards to touching some of these data points over here. Look at these equal lows relative. We know that there's what below here? What is there below here?
Liquidity.
Imbalance.
Liquidity. All right. Not imbalance, liquidity. Remember, imbalance is when you see the two wicks not crossing over and showing that imbalance. Liquidity is an area whereby people are looking at it like solid, strong. There were lots of buyers coming in here. So we're expecting buyers' stop losses to be outside of these areas. There's liquidity below all of these lows, below all of these levels. So there is liquidity is a magnet to price, just like imbalances are magnets to price. Yeah. So don't get it twisted. As much as I'm saying right now, the market can say, you know what? I'm not gonna go for that liquidity right now. I don't want it because we haven't quite got to the pong. Remember ping pong? Look, ping, pong. I haven't quite got to the ping. Back to that blue line. So don't get it twisted. If this market wanted to, it could just go, that's a bit better. And then from there, we would have, maybe it wicks there and doesn't close there and then we're just annoyed. Or maybe it closes there and then starts making a correction, getting everybody excited, pushing back up in here, and then goes like this. Or maybe on the time frame that we're looking at, it actually pushes all the way back up in here to close that imbalance then, because on a larger time frame, this is the correction. And therefore, it closing down below that level is the continuation. Therefore, there's your entry, there's your stop on a bigger time frame. And this is why sometimes you may decide that, oh, okay, boom, you've seen it coming here. You've seen a lovely indication, correction, continuation as it started to turn around. You got in, then the market started to come down here and you started getting excited and then it kicked back up in here. Well, that's why you know how to exit your trade when the things start going against you. Because I don't want to be in this ride here. I'm going to get stopped out of this ride here if it starts to push back up in here because it's this higher time frame energy that it wants to potentially come up to 50% of this impulse now before coming down here. Don't get twisted, but I'll still be correct, but I wouldn't be profitable. That the market came down here, and now it came up in here. Oh yeah, got excited, even made a little flinch like it's going in my direction, but then it decided no, it wants to push back up in here to the 50% level, then come down here. Well, I need to know how to manage that, to be in that trade, to be able to be profitable from all of that action. Yeah. And this is what I'm teaching you. And like I said to you, the strategy, the way in which it's about patience. Look, let me tell you something, another strategy. You've heard guys talk about break and retest. Okay. Break and retest traders. Yeah, man, I just kind of do break and retest. But break and retest traders do this. Here's the level, this blue line. The market breaks. When it comes back in here, they hit the button. Maybe they use some Fibonacci levels, saying when it comes back into 618 or 386 or 50%, blah, 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 they hit the trade here. To me, that's a little bit like, yeah, a little bit gun jump the gun, bro. I came back home. I did come back home for my keys so that I can go back out. But I came back home now. My home was all warm. I could smell food cooking. And my favorite program was on TV. So I was like, you know what? I'm not even going out again. Why not wait for me to come back home, grab my keys, and then see me on the Ring doorbell, leaving my house again? Now you can say, yeah, Jay's on his way. Jay's on his way because he had to go back home. He came, he's coming. Let me get rid of these things. I hope you understand my analogies as well, yeah? My analogies crack me up. I'm not going to lie to you guys in my own little head, yeah? So Jay was coming. He said, yeah, he's coming to the party. He left. I saw him leave because my brethren's his neighbor and saw him leave. And then he came back and I'm phoning him and said, bro, where you going, bro? Like my brethren said that you just saw you pull back up in the drive. Oh yeah, bro, I left my keys. At that point in time, I'm like, well, I'm not too sure, you know. Jay might just say it's long. I know he doesn't like to keep coming to these things anyway. Yeah. But then, obviously, there's some structure. Then he sees me, he looks out the window, he sees Jay, indicate by getting in his car, correct by starting his car, continue by driving off down the road. Now there's a very high possibility that I'll say, yeah, bro, I've seen him leave, man, he's left again. Now you can kind of say, yeah, he's coming, bro. Yeah, I know, bro. I know. I spoke to my next door neighbor. He said that he saw you leave again, yeah, in a hurry. Now you can expect that Jay's at least going to get down to where he just was. Because where he just was all the way down the road by the petrol station. He's at least going to get to there. And more than likely, continue going where he's supposed to be going to the destination. Where the break and retest traders, they just hit the button when they see me come back home. Hoping that I'm true to my word and that my house isn't cozy, Mrs. isn't in her lingerie, and there isn't food sitting on the side and football's not on, that I'm not just saying, you know what, it's long. Can't even be bothered going. And they just hit the button saying, yeah, I'm going, but I don't go. I'm chilling. In fact, I'm actually going to bed now. Bye-bye. Stop loss. In fact, furthermore, I'm going so far away from raving, I'm going up here to read a book. So this is why we wait for our indication, our correction, our continuation. This is why we understand the higher time frame narrative, our Russian doll theory. This is why we stay patient and we manage our risks. We know that one thing we don't know is, what the future holds. So we manage our risk. We want to give ourselves 100 trades or 50 trades before we have to go back to the bank and ask for more money and start paying people again. We want to give ourselves that space and that time. We need to understand that there are other factors at play. I've got kids. If I come home to get my keys and my kid's not well, he's coughing or his breathing's funny, I'm not going nowhere, bro. So therefore, this fundamental news, these other factors can dictate what happens in the trade. Yeah, we're making a correction, but bro, sorry, it's not even, let's go to the right day, Thursday. But bro, there's some news here that's making me concerned that that market might go down to that place that Alan said, all the way down there and be volatile and close that imbalance. These fundamentals override my technicals, override the fact that I put on my best shoes and that we bought tickets for some club to do the same thing we do every single time we go out, just stand up and drink 2 drinks and catch choke. If I come home, my child's breathing funny, I'm not going nowhere. If I come home and my back's hurting me and whatnot, I'm just going to say, it's long. I'm going to phone you and say, bro, it's dead. You man go without me. That's why we wait for that confluence, that confirmation. Yeah, he's left again, bro. And then you hear me phone, you go, yeah, bro, I'm on my way. Yeah, you can hear the car. You hear the engine, man. What are you talking about? Yeah, I'm in my car, bro. I'm on my way. Okay, cool. I allow you. You're on your way, Jay. No problem. I'm getting ready now. I'm putting on my shoes now. Come pick me up. That's what we're waiting for. That's how I trade anyway. The other guy who's trading based upon, man just landed in the yard, well, good for him. And if it works, if it makes money, it makes sense. Do you understand what I'm saying? Yeah, but if it don't make money, if it don't make sense. So on a smaller time frame here, we've seen indication, correction, continuation. If you was in this trade, you could have gotten out on this 1 minute time frame. On a 5 minute time frame, we are all right. This market has pushed all the way down here to this level, but I'm calm. Even when this market comes and pushes down here, I'm still calm because that's just an indication, which could be a liquidity grab. If the market comes down here and does this, I'd be a bit concerned, but my stop's still down here. I'm cool, is what it is. I'm only halfway of what I was willing to risk. Who cares? You got to have some skin in the game, as they say. So at that point in time, it does only if I see it close down here and then close down here, I could choose, I'm going to close myself out this early. I don't like it. Especially if this breaks the 50% mark of this region. I could say, you know what? I'm going to close myself a bit early. Instead of losing $100, I'm going to lose $70 on this one. I don't really like it. Why don't I like it? Why is it doing this? I don't know. Maybe the news that's happening today. Maybe there's some, we've got jobless claims. We've got initial jobs. We've got some core PPIs. Oh, there's an orange folder. We've got PPI, sorry. I don't know. Who knows? Yeah, who knows? Maybe, like I said, have a look. Maybe this market isn't finished. Look at it in a bigger time frame. Ping pong. Maybe it hasn't finished quite getting down to pong. This is pong. Yeah? This is pong. That blue line, make it a different color because I've got a lot of blue lines. That yellow line is pong. This yellow line here is ping. And as you can see, historically, we've been pinging and ponging. We haven't quite got down to ping again. Now, don't get it twisted. The market could choose to come up here first and then get to ping. Definitely. And if you're in that trade, you're killing it. Yeah? But the market could just decide right now, nah, Jay, we need to get to ping right now. But when it gets down here on that yellow line, I'm going to be thinking to myself, oh, discounted area. Even though we've made an indication, I'm expecting to see a correction now. And that correction, for all I know, could decide it wants to come up in here, or it wants to go all the way back up in here before deciding it wants to continue. All right? And then now we're no longer ping-ponging outside this range. And maybe the news kicks off and we see markets accelerate in my direction. So start making structure like this. Therefore, this yellow angles that I have in here, see those 2 yellow ping-pong lines, I'm going to have to change those angles like this. Because now the market, for whatever reason, is accelerating in my direction. This is the ping pong. This is the court now. Ping pong, ping pong, ping pong. And yes, we could have these other, previous little ranges here, but the market is doing something else. And then when I zoom out of that opportunity, after this market starts to make a retracement like this, have a look. Now I can move this line here, the original, and say now the new range is like that. And therefore I can get rid of this one over on the top and say the new range that this market is playing in is like that. Yeah, it's like that. Guys, good morning. God bless. We definitely had a good session. We've run over again. I didn't even realize the time till my phone started ringing. All right. Good session. This session was recorded. That's 2 good sessions. I'm going to make sure I label them both because at the moment they're not labeled. Yesterday's not labeled. Today's not labeled. Guys, stay with the program. Yeah, stick with the plan. Keep going. Don't be greedy. Try and control your psychology. If you're taking your funded challenge, you know if you blow your funded challenge it's because you did something wrong. You know that. And that's what burns the most. So, look in the mirror and make a vow to yourself, I'm not gonna over leverage. I'm not gonna trade from in the middle of a small range or middle of a range. I'm not gonna trade without a stop loss. Like look in the mirror and do the right things. If you do the right things, you will pass your challenge. And passing your challenge, like I said to you at the moment, has no significance in your life because you've never made no money from trading. But as soon as you do, and you think to yourself, rah, it's 5 grand come out of the trading, yeah, or 10 grand that I've made from my trading, you're going to realize how important, just like when you go to your job, you make sure you get there on time. You run for the bus or you drive and you make sure you find your parking space or you get up at a certain time because you know the importance of you doing that is you may not have a job. You may not be able to buy all your shiny things. So it's the same. Yeah. And I'm just trying to drill guys and make sure you're such in this habit of doing certain things that you're going to be like, bro, I never do that, bro. I am never going to do that. I am never going to place a trade, GVAN, whereby I'm just hitting the button for 4 lots and potentially, if I lose that trade, I'm going to lose everything. I'm never going to do that. You would never do that in life, of any other walk of life. Why would you do that when it comes to trading? Especially when that could be making money and that could be your job. That could be making your money. That can clear your debts. That can buy you the car you want. That can go and, buy you and Mrs. A nice trip around the world. All right, guys, good morning. God bless. I'm going to put something on the, Al, I don't know if Al wants to have a quick little mention. I see you still here about what's going on in the world.
Yeah, today is ECB interest rate news at 1:15 today. So we've got quite a few things coming up. We've got ECB, then we've got the jobless claims, and after the inflation, I did say what was going to happen yesterday. Inflation's going to go above, and everything's going to, and the dollar's going to go strong, and it happened.
That's exactly what happened.
It played
saying
out,
that before you came on the call, Al, you was a bit late. That's exactly what we said. We said that Al did say that was going to happen.
Yeah.
And we saw the US dollar, if you see in the Dixie, boom, this strength here, this essentially, look, massive candle was in less than 1 minute. And it continued pushing up from there. And then everything US dollar related and even things that weren't related, have a look. This is GU.
Yeah.
You've seen it go to hell from here. Zoop. But at the same time, we spoke about this. We said that we was at the top of the range. We said that we was looking for a sell. The market was consolidating on a smaller time frame, and the market did after it wicked up first, ever so slightly, but then did exactly what we thought it was going to go and do. But we've seen it go across. But let me show you something which is quite interesting, which I want you to understand. Let's have a look at this, which is Euro JPY, to show you how, even though this isn't a US pair, okay, even though this isn't a US pair, there's no US dollar in this pair, it's Euro and Japanese yen, shows how when America sneezes.
Yeah, everyone catches a cold. Be aware, be careful with JPYs. The Japanese bank will intervene due to the fact that the yen is very, very weak. They feel there's a lot of speculation. There's been talk in the last 2 weeks now because of what's happened yesterday. The Japanese will intervene, meaning they will strengthen their currency. Yeah. So be careful if you're in yen pairs. That's going to come. Yeah. And when they do, whichever way you are, that's going to have you're going to see a massive wick. Yeah. Right. So just be very, very aware of the yen. There will be intervention from the Japanese.
Thank you very much, Al. Great information, guys.
Yeah,
I'll tell you what
understood.
Yeah, wicked. I'll tell you what I'm going to do this morning. I'm going to ask you guys, first one to post. We can either watch this, which is something that's there to I've been fasting, guys, since Sunday. Straight melon, watermelon. I'm feeling amazing. Leaning off as well. Eyes look feeling bright. I'm feeling good. Yeah. So I was every so often, you guys know I always tell you that I do the fast and the melon. And I said, let me show you a little flex right now that I'm doing. Actually, I'll post a little picture. Like I'll bust my melon in half. And I do also put some seeded grapes in there, and it come like fruit salad. Like just with a spoon. I ain't got time for cutting them into slices. I just bust it in half, yeah, and it's got my spoon. Put some seeded grapes in there, and that's all I've been on. And it gives your body a chance to stop processing food, stop digesting food. I mean, I've stopped going and doing a number 2 from about yesterday, yeah. And there's nothing in me to do that, but my body is still getting all the nutrients, vitamins. I'm still going gym every morning. I'm still active. I'm still working. I'm still here. And if you haven't tried it before, I say try it. Try it for a day or 2. Yeah, I don't have to go crazy. I'm probably going to do a week, maybe 2. All right. But try it for a day or 2 and just see how in fact, I'm going to say this. Try it for 3 days. The only reason why I say don't try it for 2 days or 1 day is because initially you're not going to feel good because your body remembers that you're supposed to be eating. And you are going to be eating because you can eat. This is why the melon one is. Let me just say this quickly. This is why the melon fast of eating melon is a lot easier than, say, for example, if you was just drinking it, juicing it and drinking it, or you was doing a water fast, which I sometimes do also. Because with the melon, you're still eating, you're still chewing, you're still using a spoon, scooping it out, putting it in your mouth, chewing. So your body is eating, thinks it's eating, especially if you're going to eat at lunch, dinner, and whatever, maybe you're eating still. And you will be full. Don't get twisted. You'll be full up. You'll be going to the toilet and pissing like you've drank a gallon of water. Yeah. And you will be eating and you will be full. Yeah. But initially, that first day, your body's going, bro, like, maybe you can smell the food in your house. Maybe you got that loaf of bread, hard dough bread, just sitting there, just winking at you, or the biscuits that's there. And initially, that first day or so, it's going to be tough. But by this end of the second day, you're going to feel fantastic. You're going to be going to the gym and pushing more weight than you've ever pushed. You're going to be running faster. You're going to feel great, have more energy. Yeah. Yeah. Yes. So try it. Maybe in your own time. I don't never try to enforce it on anybody of trying to do these type of things. But remember, if you don't know the benefits of fasting, the benefits of fasting have been catalogued historically for way back in time. The benefits of fasting. Every religious book will talk to you about the benefits of fasting. And you've just got to look at it. If you don't want to be religious, you don't want to get techie about it. Just got to think of it in this aspect. You're giving it a break. You're giving your stomach a break, yo. Just think about what you do on a daily basis. Maybe not you, if I'm not being specific, but think about it. Breakfast. Let me grab a little couple of nibbles, a little snack whilst I'm at my desk, little nibbles. Lunch. After I eat lunch on the way home, let me have a little nibbles, let me a little crisp, maybe have a little something. What's that, man? Sharing out chocolates at work? Let me have a little bit of chocolates. Then dinner. Man, I box out dinner. Some man, if you're lucky, you're going to get dessert after dinner, or you're going to have a little treat, or before bed, you're still nibbling. Now think about what's happening in your stomach, yo. These guys are working overtime, no time off, no days off, no nothing. These men are just shoveling, constantly shoveling, packing, putting out the back door, shoveling, packing, shoveling, more. Oh my gosh, more shoveling. Before I could take a break, before I could watch a little program, shoveling. Before I was gonna go and do a little back testing and do some. Oh my, we gotta do more shoveling. But you know what the problem is? Let me show you what the problem is. The same little guys in your stomach that's doing the shoveling are the same guys in your body that would also go and take care of the troublemakers. They're the same people in your stomach. I'm trying to use this as an analogy. That go and take care of the troublemakers, the cancerous cells, the problems. Let's go and fix a leak. If you got, look at your yard. There's bare things to do around your house. The only reason you haven't done all the things around your house is because you haven't got time. Because you're at work, and then the kids, and then this, and then that, and then breakfast club, and then you're at work, and then you're sleeping. But imagine you had time. Allah, you'd go and fix the little hole in the wall. Allah, you'd go and paint the spare room that's needed painting. Allah, you'd go outside and cut the grass. Because you've got time to do so. You think about that metaphor in regards to your body. It's not supposed to be here just constantly trying to break down beef burger or trying to break down pork meat or trying to break down red meat. It's not supposed to be constantly doing that. Give it time to do the things. Eat when you're hungry is how we used to eat. We used to eat when we were hungry. We never used to eat because someone said, ding-a-ling-a-ling-a-ling, it's breakfast time. Ding-a-ling-a-ling-a-ling, it's lunchtime. That breakfast thing was created by the Western world. That man have to eat for straight away in the morning, eat cereal. Breakfast. That's a Western world thing. Go and see any animal in the wild. They ain't out here eating like we eat, like constantly. So therefore, I'm just saying, it's my little rant. If you have never done it before, try it. And the melon thing's easy, especially if you like watermelon. Watermelon's sweet to the taste. Yeah, but it's giving you a lot more than water. Water doesn't mean too much, guys. You understand what I'm saying? I think I mentioned it to you before, that you just having man say that they're drinking water. It's good. You drink your 5 liters too. Obviously, you've got bodily functions that need fluids passing through. They need that motion of things passing through them. But if you think about it, a child, a newborn baby doesn't drink water for months. A newborn baby who you'd think needs the most amount of nutrients and fluids and help doesn't drink water for months, just has breast milk. And breast milk is liquid and carries more nutrients than water. Otherwise, they'd say to you, just put your baby on water for 2 months, see how it does. So it's the same. Melon juice, coconut water, cucumber water. These are all, well, cucumbers and melons are from the same family. But they are very...
Sorry to interrupt you. I agree with you. I break my fast with fruits every morning, and watermelon is really, really good for the body, and so on and so forth. I'm very much in the health thing. I mean, at my age, everything you say, I totally agree with you.
I read something. I watched something with a woman. I'll try and find her. She's 63. She looks wicked, black woman, yeah? But she's got a book that she sells, and her slogan, I put it up one time on my thing. It says, people. It's something like it's not word for word. It's something like, you only consider health when sickness comes. People only consider health when sickness comes. Something like that. Do you understand what I'm saying? Yeah. And I'm telling you guys, especially as I don't consider myself old. Yeah, but I'm not young. I'm not a youngster. Yeah, but even at my age, I hear some people popping down with sickness, yo. And I'm not trying to say that it's their fault, or I'm not trying to say that, that's not what I'm trying to get at. I'm just trying to say, if you're not considering your health, the same way you consider your appearance when you leave the house, you iron your clothes, you put on your good shoes. You understand? So you brush your teeth, you comb your hair, you're considering what you look like to the outer world. If you're not taking that same consideration about your health, if you haven't sat around and thought to myself, I had this week, I had McDonald's on this day. McDonald's ain't even food. I had, chips on that day. Then I ate this. Then I did eat the whole pack of biscuits on that day. You're not even considering, because that's just what you're doing on that day that you can remember. What is the compound effect of you doing bad things? Well, unfortunately, guys, the compound effect of you doing bad things is sickness. That's just a fact. And if you think to yourself that you're a car, you're an engine, if I go and buy a brand new Ferrari and I put dog shit in the engine, is it going to go anywhere? Is it going to do 0 to 60 in 4 seconds? It's going to explode. Doesn't matter what it looks like from the outside, because a lot of people confuse what they look like from the outside as them being healthy on the inside. It's a complete confusion. You have visceral fat that's in your arteries, fat that's raising your blood pressure. I know somebody that was going to do something completely random, and they wasn't able to do it because the doctor found out that they had high blood pressure. This person doesn't consider anything that they do with their health. They don't give a damn, but now they do. But unfortunately, hopefully not for anybody here, but for a lot of people, they start considering health too late. Like, man, I'm like, okay, it's really good that you're going to the gym now, but you ain't been going to the gym for 40 years. It's really good that you're no longer eating these crap out your diet, but you have been doing it for 35 years. So it's like, you kind of built up a bit of a negative equity, bro. You know what I'm saying? Yeah. So I think that unity, go on, Dow. Go on, bro. He's going to say something. Someone's not, you unmute yourself. Cool. I think that unity is not only just about, like I said, it's personal development on all levels. If I can help, or vice versa, Sister Abana sends me stuff all the time for me to go and look into, check. Got my Shilajit, got my Chaga, got all types of things in the yard. I keep it popping. Because I'm just trying a thing. Just like you're trying a thing right now. You're trying to learn this finance thing. You got to try and make sure that you're in the best place. And especially, let me tell you something, especially if you start doing your, let me see, have we got no women on the call right now? Don't think we have. Especially if you're doing your melon juice and them thing there, and you think yourself, rah, bro, you out here running faster, moving harder. You get me? You out here jumping higher, skin's feeling best. You start saying, right, wait a minute, this actually works. Just like right now, there's people right now that have been on Unity, looking at this strategy, didn't understand it, was even dubious about it. Their family members were saying to them, why are you bothering this stuff? It's a scam. And now they're passing their challenge, or they're taking great trades, or they're doing something. They're like, no, this actually works. I can actually see it working. Why would you stop? Why would you stop and not try and do the best? So guys, for sure. So I'm saying what we could watch is I was either going to watch this Yaki Awaken video, autoimmune disease, reverse with this simple key, all right, which you know Yaki is follow Yaki, all right, as well as a lot of other people have done a lot of other research and people are looking into. Or we can watch, I saw something up here which was about Julius Malema confronts the judge on Israel and Palestine stance. I like Julius Malema because he just doesn't have it. Yeah, I love the fact that he just doesn't have it from the Westerners, because he knows how powerful he is. He knows how powerful Africa is. Okay, so he's standing up for being African, and he just doesn't have no nonsense from Togo. So he's either going to watch that, or we're going to watch Yaki. First to post. Whoever says something first, that's what we're going to do. Which one?
No, I'm stepping anyway.
No problem. Anybody who wants to? What should we do? Real quick. Otherwise, I'm going to decide. Too late, Yaki. All right, no problem. Guys, good morning. God bless. Have an absolutely fantastic day, yeah?